Good afternoon, traders. This is Christian from Hertz Trade Group, and this is your end of day market recap for Wednesday, January 14th. Another whippy day on our hands, and an interesting day. I think that just a quick observation for the day is that if you came in, pretty heavy to the long side, some names, you were able to kind of take advantage of what we had in the beginning of the day, which was basically a gap up. All of the indices were heavy green in the beginning of the day. The breadth was decent in the beginning of the day, and then things kind of really flipped around a bit. And that was, I think, indices made their highs like right around 1 o'clock, which leads us to the other catalyst for the day, which is what's been going on in bond yields. And I think this is basically how I ended the video yesterday, just talking about that for now, like, it was kind of a bit iffy, and it's been that way for about a week in terms of bonds holding on to support, but that there's not a lot of support nearby. And as if you're a regular viewer of my videos, you know that I talk a lot about bonds because I think that they have a lot of implications. I reviewed, I think, in yesterday's video, the relationship between TL. If it wasn't yesterday, it was the day before, the relationship between IWM and TLT over the last couple of years. Again, there's a relationship there. It's not going to be every tick for tick, but generally, when yields are going higher, bond prices are going lower. IWM doesn't do well in that environment, and like we saw towards the end of the year when bond yields started to really leg lower after October. That was a very good environment for IWM, and IWM outperformed, in the last couple months of the year. So, we'll get into some of the charts in just a second. Risk disclaimer in front of you. Everything that we're going through is for information purpose, only, not giving any advice or recommendations. The other thing that makes things more complicated too right now is we're now in the heart of earnings season, and you're going to get a whole bunch of kind of just, different moves as companies are coming out and providing different information about not only their business but about this, about their about the landscape of their sector or group, right? And that could possibly change things. So I always find it a little bit more difficult to swing trade in this environment, because the events like earnings can really take take precedence over a trend that you're seeing, right? The moves can be quite erratic, and that was kind of evidenced by what we saw in the home builders earlier in the week, which were breaking out. All of a sudden, a company comes out and says something negative, and it could push the whole group back down. So let's kind of just review a little bit of the charts and kind of what we saw for today. And I'll start with those bonds. I'm sorry to be boring, but here's what TLT is doing. Right. We know that for the year, I think TLT is down about 5%. Right. I think if you look to see what IWM is down for the month, 3.2%. Right. It's going to be they're going to move somewhat, again, not exactly tick for tick, not exactly the same percentage, but there's a relationship there. And here's what ZB looks like as well, which is 30-year bond futures. Notice that they're starting to break their January value area. So not a good look here. And if this continues to break, right, and you could see that we did take out last week's lows in the 30-year bonds, then I think holding less positions, I think, is the right thing to do while yields are going up like this. Remember, again, when I say yield, we're looking at bond prices, and yields are inverted with the bond. This is how a bond works, right? If you need to see what bond yields are doing, if you can't get your head around that, um, here's what bond yields did today, right? And we had a 5-year auction today, which did not go well, right? And that was really kind of the catalyst for things to for the change. But yeah, I mean, this is a big move in terms of basis points. And then also considering, where things started for the day, bonds were going up in the beginning. Sorry, this is the this is for the week, but bonds started the day higher, right? And then move like that. Now, again, if you look at the IWM chart, for the day, it's kind of the same thing, right? Start of the day at one point, I think coming into the open, IWM was up 1.1%. That's a awfully big reversal, and IWM finished down 80 basis points. So if you go back to the spreadsheet over here, and that's why I like to look at percentage from the open. But yeah, that's a 2% move from where they opened this morning. So that's another big rejection for IWM. All right, and the VIX did go up today. It was kind of odd that the VIX was just moving lower the whole day yesterday, even though for most of the day yesterday the market was going sideways. But and today the VIX, which may have been, it's tough to really kind of use the VIX for a signal when we talk about percentage change, because it's such a low level right now that 1%. But is, not a big, not a big move in turn when we look at the overall level of the VIX. But we're back up to, so 13 is just not a big level in the VIX. But if we look at this chart, and I don't do chart patterns in the VIX, I just basically kind of look what the price action is kind of telling me. And we just moved off the lows, a little bit there in the VIX. So let's talk a little bit about the price action in the S&P and the Qs, and we'll look at these charts. Yeah, that's a rough looking candle for the day, and we are a bit overbought. Not the S&P is not as overbought as the Qs. The RSI for the I don't know why it's not giving me a level for this. Maybe just wait a second. It's a 68 RSI, right? So we're getting to that overbought level. Could we kind of revert back here a little bit? We could, but really there's no, other than an ugly looking candle for the day, we haven't lost the trend. We're still above the 5-period moving average, right? And here's the Qs. The Qs, like I said, more overbought. That's a 75 RSI and more extended away from that 5-period moving average. And I think this would be healthy if this kind of came in a little bit. But still up, a 0.5% for the day. So I was mentioning this in the TTG trading room today, is that, if you came in, and I mentioned in the beginning of this call too, but if you came in and you were long today, this was a great thing. And if you were long even the semiconductors, right, there was some aggressive moves in that space up until, around that bond auction time. And here's the reversal. And this is why I do say to pay attention to these bond auctions. Even though that's not something that we've had to do, over the last 5 years, right, is to have to pay attention to bond auctions, but they can be a catalyst for the day. And that's exactly what you have going on right now. So there's your reversal. I don't think this really puts too much of a dent in the 1 hour chart. No, I mean, we're still basically above here and where we were in yesterday's move. So all in all, a tough day of price action, a whippy day of price action, but no major move in or change in trend. But I think you have to be cognizant of the overbought levels in the especially in the Qs here. All right, so that's I'm going to kind of keep it simple. We could talk a little bit about the semis and what they did today, but the same thing, right? This was the consolidation earlier in the week, and even though that this was a tough reversal, we're still setting it. This trend still looks fine in the semiconductors, just crazy as that looks. And again, when we look on this on the daily chart, look at the volume today in the semiconductors too. So again, would I be going long the semiconductors here? I don't mind day trading them here, but I think that things are just a bit too heated. And that makes it difficult when you have a gap up day like this. But I think if you're doing well, staying grounded with this market in here, then I think you're doing better than most. And personally, if we kind of look back and say, where would I get long versus where would I be taking profits, right? Here's your break higher, right? Here's your break out of the consolidation. Like, here's your place to go higher. Here's your break, which we've talked about all last week, right? And now it's the place to be, in my opinion, to be taking some short-term profits. And again, when I talk about time frames, I'm talking about more of the shorter time frame, right? Days to weeks, right? If you're on a different time frame than me, right? If you're more of a long-term person, then this bit about being overbought is not a horrible thing long term. But if you're trading more in the short term, like my opinion is let this kind of come in and consolidate, and it may set up for another entry. But I think up here we're a bit extended. All right, some names that reported after the close. I know I've talked about this a lot with earnings. Tesla's not that bad, only down 3%, by the way. Right, it just kind of shows you that I think a lot of bad news or expectate there's some poor expectations going into Tesla's earnings, but overall, that's not such a bad price reaction given the fact that that their quarter was not very good. They missed estimates. They talked about margins as well, and I think perhaps maybe a new model that Elon might talk about on the call is also what's helping. When you have a new product launch. On the upside, IBM, just continues to crush. Basically, that name was extended into earnings. So was ServiceNow. I mean, ServiceNow was up, I think, close to 40% from their last earnings just a quarter ago. I sent a tweet out about that. I hope that sometimes it's when you're putting out big ideas into a tweet, sometimes uh, the understanding doesn't come across 100%. But like, here's a good example, like ServiceNow. Well, here's one of the points I wanted to make is that when you come in overbought, I mentioned that ServiceNow is one of my favorite names to play for earnings, because they have such a good earnings history. But you have to be cognizant of what the stock has done. Right, up 40% over the last quarter is huge. And what I'm referring to as well as their why it's such a good name is look at the performance the day after it reports earnings. I think, if you go back like 20 quarters, right, it's up like 15 out of the last 20 quarters the day after earnings. So it is a really monster of a company on earnings. But for any name that's going to report earnings, whether it's Tesla or I gave an example of ServiceNow, right? It's very important to understand that some of these names, again, it depends where the stock has been and so on and so forth. You take the example of ServiceNow when they reported last quarter, right? The stock was going sideways for a while, right? They come out and they have a good earnings quarter. They could be a superstar for the next quarter, right? Never mind, some people think on earnings day, they're like, oh, I missed it. The stock's up 5 or 6%, right? But look at what the reaction was afterwards, right? As institutions begin to accumulate the company because they executed really well, right? So this is what we're gonna, and we've already been compiling a new earnings list um, for the quarter, but this is where you're going to find your leaders, right? Names that do something really exceptional. And if there's a good sector trend in there too, right? If it's a favorable sector, right? It's not hindered by interest rates or something like that. You're going to find some big winners. And ServiceNow, like it hardly even blinked, basically once, after it came out with earnings versus what happened with Tesla last quarter, right? And the reason why I bring this point up is because I find people get stuck in trades, right? They fall in love with a company and they are always looking for, oh, what do you see in the chart? Like, what's it telling me? Well, what I see in the chart is that the company did not execute well their last quarter, right? And if you look at what they did over from October to now, it was basically nothing, right? And it had a couple times at a breakout and it didn't work. Why didn't it work? Right? Because funds are looking to sell into strength when a company does not have a good quarter, right? They're looking to take advantage of that and they're lightening up. For the most part, this is the case about 90% of the time. Now, of course, there could be something that changes in the middle of the quarter. If the company comes out with a new product launch, right, they come out with some new advancement, right, then that could change the dynamics of the stock. But for the most part, if you notice that, that you traded a company a lot over the last quarter, and they come out and they don't deliver on earnings, often they're not gonna have that same performance, and they might be something like Tesla was, which is essentially dead money over the last quarter, right? And it drastically underperformed the overall market the last quarter. So that's just something that I try to kind of bring up in these videos to help, right? To give traders perspective. If they're trading, if month to month is something that you're concerned with. Now, if you're like a 5-year investor, right, then maybe you don't care about some of the quarters that they really miss on, right? So it does matter based on your time expectations. But if you're concerned about what the stock is going to do week to week or month to month, and it doesn't put up a good quarter, odds are it's not going to be a really good name to be trading, right? You're going to get frustrated, and you're going to get let down when every time it tries to rally, it's going to get sold. Right. And again, it doesn't matter. I always hear this stuff from people on Twitter. Oh, but they're buying the calls, and it's okay, maybe if they're buying the calls out for 2 years, maybe the next quarter might do something, but try not to mix that stuff up. I think people really get infatuated when they see calls, and it messes with their judgment, right? You should be looking at every company objectively. um and when sometimes when you see call flow, it messes around with your judgment. So those are a couple things that I try to bring detail into what you're doing on a day-to-day basis, and understand when a company does have good earnings, that it could be a name that you really find a lot of good trading opportunities for the next quarter. All right, guys, I'll leave it there for the night. Have a great evening, and I'll see you back in the trading room.